Hello, today we're changing it up a bit for our Economic Weekly video. I'm going to discuss a very interesting subject in which Connect First Credit Union is working hard to change while partnering with an amazing organization, Momentum. The topic is payday loans. So, what is a payday loan? A payday loan is typically a small, short-term, high-interest rate unsecured loan whose repayment is not necessarily linked to the borrower's payday. These type of loans usually rely on verification of the consumer's previous payroll and employment records, although some payday lenders neither verify income nor run credit checks. Payday lenders do not compare their interest rates to those of the mainstream lenders, but instead compare their fees to overdrafts, late payments, penalty fees, and other fees that would be incurred if the customer were unable to secure any credit whatsoever. The likelihood that a family would use a payday loan increases if they have no financial institution or lack of access to traditional deposit bank account. The demographic that uses payday loans includes the working poor, the vulnerable, and the people living on lower income. Most borrowers use payday loans to cover ordinary living expenses over the course of several months. Payday loans in Canada were governed by both federal and provincial laws, which imposed specific regulations on this type of loan, including lower interest rate caps, until the federal government ceded power to the provinces to set their own rules in 2007. In Alberta, payday lenders are allowed to charge a maximum of $23 in fees and interest on each $100 borrowed. Despite the high cost, the share of Canadians using payday loans has grown rapidly. The portion of people who say they or a family member have used payday services in the past year has more than doubled to 4.3% last year from 1.9% in 2009, as a growing number of people are now living paycheck to paycheck. Since payday lending's operations charge higher interest rates than traditional financial institutions, they have the effect of depleting the assets of low-income borrowers. Calgary is also weighing new rules on payday loans as the city is planning to implement a poverty reduction initiative, which has identified a payday lending bylaw as one possible solution. City Council is looking to pass rules that will limit the distance between future locations so that they're not clustered, which gives people the impression that this is the only opportunity for those in need. Lower oil prices could add to the problem in Calgary, as many of the people who are getting laid off do not have an emergency fund, so they're running into the problem of needing credit right away. And if they can't get it from their financial institution, they're more likely to go to a payday lender. A mapping of 86 payday loan locations in Calgary found that 73 of them are located in areas with above average rates of poverty. So, what are we going to do to help people that are in this payday loan cycle? So far, there has been a pilot program built within the First Calgary Financial Region by working with our community partner, Momentum. This pilot allows clients of Momentum who have participated in their money management courses to be referred to one of our 2 pilot branches to receive a low-interest loan of up to $1,500 with flexible repayment options. So far, First Calgary Financial has loaned out $11,500 to 9 participants in the first month of the pilot program. We have been charging a rate of 12%. That means that for every $1,000 loaned out, we are charging $10 of interest per month. Compare this to the typical interest rate of 400 to 600% APR on a payday loan, which would mean they would be paying approximately 33% interest on the first month. When you do the math, we are saving these new members $320 in interest a month on each $1,000 loan. So, in our first month, First Calgary Financial has been able to prevent $3,800 from being unnecessarily paid out of the pockets of the working poor and helping those people get back on the track to financial stability. From what we have learned so far, most of the participants are using this cash crunch loan to pay off existing payday loan debt. As a local credit union, we understand we have a critical role to play in helping reduce the negative impacts of payday lending by providing low-cost, flexible, small loans to those in need. This pilot is helping us reach the underbanked and hard-working Albertans get out of bad debt. If you or someone you know is in the need of a cash crunch loan, please encourage them to contact Momentum at 403-272-9323 to learn about the first step.